All right, here I am with Willem Middelkoop. Willem, it's great to have you back on the program. How are you?
Well, good to be back. Has been a while. Fine
Been a
here.
while. It's been a while. We're going to have you live on stage at the VRIC in a few months. So looking forward to jamming with you today and finding out how you're interpreting this market. We were chatting about sentiment a little bit right before I hit record. You made one comment. You said, the GDXJ might have bottomed by now. I'd love you to explain that and elaborate on that case for me. Let's start there.
Well, this market feels like the start of 2016. Maybe you remember January 2016. We came at the end of a very long bear market and everybody was depressed and there was no liquidity in the market. And then January 16, there was a turn in the market without any news. The market just turned and then it started to run and run. And we've seen the same in March 2020 during the COVID crisis. It was March 16 and we started to buy that day. We were 10% in cash and that turned out to be the bottom. And then the market started to run with 5 months back to back with double-digit gains for our funds. And that's what I expect now as well. Everything is so depressed. And I don't know whether the market will turn this week or next month or maybe Q1 next year. But I know the market will turn and probably sooner rather than later. And then you'll see a very, very strong recovery because this is what always happens. You have low liquidity. There are always funds which need to sell because they have redemptions. Fortunately, we don't have redemptions. We still have net inflow. We've had net inflow every year since our start. We're very fortunate for that. But these funds who have redemptions, they need to sell and there are almost no bidders there. So they take the whole market down. And once the market turns, and the selling stops, and then you have everybody willing to buy shares on the cheap again, and then you get these double-digit gains. And if you look at the market from a technical perspective, Elliott wave perspective, the GDX seems to have reached the bottom already. Gold seems to be near a bottom or at the bottom, and silver is also showing some early strength. So I'm not that negative.
Yeah, no, that's good. And I like how you framed it. You don't know when the market's going to turn. I spend a lot of time emphasizing that in my newsletter, for example, if I'm entering a position, I talk about it and subscribers often make the assumption that therefore I believe this stock's going to run over the next quarter or two. And it's like, no, absolutely not. That's not the statement I'm making here. I'm a long-term value investor, as are you. And how you broke it down there, that we saw this rally in 2016. We saw this rally in 2020. And what that was roughly 5 months of double-digit gains month over month. And that's kind of how, is that kind of how investors should expect this secular bull market in commodities to continue with fits and starts like this? And so it's therefore, I would think it's hypercritical to be positioned. You're not going to be able to time that. What do you think?
It will be all different this time because what we've seen in 2016, for me, 2016, those 6 great months, was the very first start of a new bull market. Actually, it was the end of the bottoming of the whole commodity space. Gold was near $1,000. Then we had a retest of that bottom March 2020 during COVID crisis. And then we had another uptick, a very short term uptick that took us 5-6 months higher. And so the bottoming phase has been completed now, one could say. So a first bottom 2016, second bottom March 2020, and now we have a third one. And what we'll be witnessing now is the start of a very strong longer term bull market. So another bull market which will take 5 or 6 months. And that bull market can be explained for fundamental and for technical reasons. Fundamental reasons, you have real shortages coming to the market. Then you have all these politicians, moving us into EVs, and we all need to have EVs. And look at these cars, a Tesla has 100 kilos of copper. Traditional cars, only 10. Look at the lithium space. We've done a lot of research. We need 70 new lithium mines within 15 years. It can't be done. Look at the statements of insiders in the copper experts like Friedland or the Glencore CEO. They all say copper price should be much higher because there's a huge demand coming. And if you look at the production is starting to decline in several countries. Codelco in Chile is reporting very weak production numbers. So we'll see production deficits. And then we have the dynamics between the East and the West, the BRICS against the West. And commodities and gold will be coming to play from a geopolitical point of view. And then you have the debasement of currency and inflation. So everything points to a perfect storm for commodities. And people will be shocked by how strong that bull market will be. And that can take a decade or even longer.
So therefore, your thesis extends, I wanted to get to this, beyond precious metals, beyond base metals, into commodities as a whole. And yeah, that would explain, what we've seen over the last few years. There's been little rallies here and there, like lumber had a run, grain had a run, energy had a run, then it pulled back. Now it's running again. Uranium's hot today. Gold and silver were hot in 2020. They've cooled off since, but they'll run again. And it's hard to predict, right, where the little pockets of rallies are going to occur. But that's maybe how a secular commodity bull market functions. Things get overbought, then they get oversold, then they get overbought, and it's volatility on the way up. I want you to mention the Elliott wave, because you spoke about that about 5 minutes ago, and your justification for GDXJ where it's at. Can you elaborate on that point for me? How do you interpret the Elliott wave, and how do you put it to work?
Well, I'm not an Elliott wave expert, but I follow the best one out there, which is A.V. Gilbert of Elliott Wave Trader Net. And he was the guy I found when I was doing some Google searches in 2015. I was looking for the guy who predicted that gold was topping out in 2011 at 1900, because everybody thought the bull market would continue. And then I found A.V. Gilbert. He predicted actually the top for gold in 2011. You can still find it. It was a public piece on Seeking Alpha. Yeah. So I started to follow him. And then he predicted a bottom for the resource and gold space early 2016. And he predicted that in the summer of 2015. He was right again. So I started to follow him even more closely. And I like his model. I like his fundamental, it's almost mathematical approach of markets. And if you read his stuff, and some of his stuff is out there for free on Seeking Alpha, he's made it very clear. This is really the bottoming phase for the whole precious metals space. And I think I agree, because I understand the way he counts markets. And never forget, Elliott Wave is just a visualization of mass psychology, one could say, in markets. It's how investors behave. And now we're clearly in the capitulation mode. And the capitulation phase is always the last phase, and then the market turns and it starts to run.
I've been a commodity investor for over 15 years, and I'm the host of one of the world's largest commodity investment conferences. I teach a 10-chapter course on commodity investing for beginners. No complex strategies, just actionable information. Our comprehensive course breaks down the complexities so you can make informed decisions and gain financial freedom. I'm Jay Martin, and this is the Commodity University. Okay, so you mentioned, our inability to really predict metal prices short term. I like that a lot. I totally agree. You can't predict what's going to happen this quarter, next quarter, but we can make some fairly strong assumptions about how the world might look in 10 years, right? That's an easier concept to wrap your mind around, and escapes from the near-term volatility. You talked about geopolitical implications a little bit. So I'd love to know how you think about geopolitical risk today, given that there's sort of chaos in every direction that we look right now, Willem.
Yeah, as you might know, I wrote The Big Reset in 2014. I published the revised edition in 2016. A Chinese edition was published in that year as well. And I concentrated on the upcoming confrontation between, let's say, the East and the West. I pointed to the cooperation between Russia and China already in 2015. And they really signaled to the world that they wanted to reconstruct the current world order, and everybody was laughing at that time. And now we're in that part. They really work together. But it's not just China and Russia. We have over 140 countries not joining Western sanctions on Russia. These are not all Putin friends, but they're just fed up with the Western hypocrisy. And we didn't have any sanctions on the US when they invaded and bombed Iraq and Afghanistan. So we have this divide now between the West and the rest of the world. The West is only 1.5 billion people. The rest of the world is 7 billion people. If you look at GDP, the BRICS GDP is already larger than the G7 GDP. So it's a numbers game, and we are losing it. And if you listen to experts like Zoltan Pozsar, who was this analyst with Credit Suisse, he started his own shop now. He used to be with the Fed, and he wrote a great piece just after the start of the Ukraine invasion. And he said, we're witnessing the birth of Bretton Woods 3.0. We're witnessing the birth of a new monetary system coming from the East, centered around gold and commodities. And he's not a commodity guy, he's just a generalist macro analyst. But he pointed this out. So it's a fight between the Western fiat paper-based, let's say, treasury system and the BRICS system, who are working on a parallel trading and financial system, which is centered around gold and commodities. And we shouldn't forget, Russia, that country is full of commodities, and China is doing all the arbitrage now, and they understand this. They understand how to play this, and Brazil understands this as well, and South Africa, and all these countries in Latin America and Africa. And I think we're in for a very interesting ride, especially for commodity investors, because we'll see a move away from the dollar-based system. It's not a collapse of the dollar system. I don't expect a collapse of that, but it will become less significant, and commodities and gold will become more significant. And how do we know that? Well, look at what central bankers do. Don't listen to what they say, just look what they do. There was record gold buying by central bankers in the last 12 months. We need to go back to 1969 to see these record amount of gold buying by central bankers. And that was when the London gold pool collapsed just before Nixon closed down the gold window in 1971. So this is a very telling sign. And I think gold is in play. A gold revaluation could be next. And I think this is the last time you'll be able to buy gold equities at these depressed levels.
Okay, I want to get into that. Before, though, one last question on the central bank gold buying, Willem. Willem, if I were to ask you why are central banks stockpiling physical gold at record rates? As you mentioned, I think the rolling 12-month average is something like 1,200 tons. And it's not just BRICS nations. Last quarter, the leading purchaser was Singapore, maybe, a Western allied nation. So it's everybody for sure, except Canada. But why? What's the why?
Well, Poland is tripling its gold reserves. Hungary is increasing gold reserves tenfold. These are European countries, not big BRICS countries. Mm-hmm. So when the money printers are starting to buy physical gold, there must be a reason. And I think they understand, as I clearly pointed out in the big reset, that gold revaluation is one of the last cards the central bankers can pull to save the system, to save the balance sheets. And look at the holes in the balance sheets of central banks because of the bond crash of last year and also this year. So they need to fix these holes in the balance sheet. They can use revaluation accounts. So a revaluation of gold helps all central banks in China, in the US, in Europe. And then we have, of course, the BRICS movement, which is very supportive, like I said, for gold and commodities. So from all these directions, however I approach the market, from the fundamentals or technicals or the macro side or the geopolitical sides, it all points to higher commodity prices and higher precious metal prices. And markets are almost designed to fool you, to punish you, to make you crazy, and then they turn, and then 1 year later you think, how could I have sold these shares at these low valuations?
Okay, so how are you putting cash to work right now? Talk to me about positioning and what you like at present.
Well, we always liked the precious metals. There was always like 70% of our fund was precious metals related companies. We scaled that down a bit to 50%, and now 40% of our fund is invested into the battery metal space, so copper, lithium, nickel. We ignore cobalt because cobalt is a very small market, and the industry is trying to phase out cobalt. But copper and lithium are very strong markets for the future. Of course, there's a correction now in both markets. But if you study lithium, and we study the supply and demand, we need over 70 new lithium mines. We need over 50 new nickel mines. So all these metals are in high demand. So once this destocking correction is over, and once the Chinese are coming back into this market, I think we'll see another strong market for lithium and copper. Well, study the supply and demand for copper. That's a no-brainer, and so that's why we invest more and more money into the battery metals. And we also have 7% in uranium listed companies, because uranium will benefit greatly of the net zero energy policy environment.
Okay, and I have to ask about the 3% then. If we're 50% precious metals, 40 energy, 7%, 40% energy metals, 7% uranium, what's the balance?
Yeah, well, there's, you have some phosphate, you have some cash, there's some other energy plays. So we do some ETFs.
Okay. Any names in the gold sector right now, Willem, that you think our audience should add to the watch list?
Well, we like discoveries. We are specialized in the top 100 most significant undeveloped mining projects, but actually we're metal agnostic. So we follow the top 10 copper discoveries, the top 10 lithium discoveries, the top 10 gold discoveries worldwide. And one of the most interesting projects for sale now, really for sale, look at SolGold. They have the copper gold discovery in Ecuador. Everybody hates Ecuador, but the Chinese think it's okay. You can buy it pennies to the dollar. Whole SolGold is valued for $400 million. Look at Greatland Gold, that's in Australia. We like Australia. There are a lot of new discoveries there. That's valued sub $400. That's a great copper gold discovery as well. So sorry, no North American place, because in North America, especially Canada, there are not that many new discoveries which have tier 1 potential. Well, of course, we see it in the lithium space. Patriot Metals is a great tier 1 project in the James Bay area. But it's very hard to find real new big gold discoveries in Canada.
Yeah. Okay, excellent. Willem, where can people find more of you if they want to hear from you more frequently? Where should we point them?
I'm quite active on Twitter. Just search for my name. I'm also, I started early this year on Patreon account. You need to pay a bit to get my best information. I was fed up giving everything for free on Twitter. And of course, you can look at our website. Actually, there's a free manuscript of the Big Reset. You can download it for free at our website and leave your name and be on our newsletter mailing list.
Okay, and the URL there?
Sorry?
The URL?
Oh, that's cdfund.com. So just Google for Commodity Discovery Fund.
cdfund.com. Excellent. Okay. Look, thanks for coming on the show. And we're going to see you live on stage at the VRIC January 21st and 22nd in Vancouver, British Columbia. I'm looking forward to that. Thanks for coming on today and chatting. Appreciate it, Willem.
See you in Vancouver.
All right.